You can see how it's a situation which leads to loss of credibility in a fiat currency. It's actually as simple as that. It's not so much gold rising, it's the dollar going down. Now, most people would think, well, the dollar is actually pretty steady. The trade weighted is 103.4 or 6 or whatever it is. But we're not talking about the dollar against other fiat currencies. I mean, it is the king of fiat currencies. We're talking about the complete fiat currency cohort meeting a problem. When gold starts running higher, silver runs almost twice as fast on average. So now that we see that gold is breaking out into the upside, we're talking about the price of it in dollars, then on that basis, I think we could well see that silver might catch up and run back up to that $26 level.
As history has shown, precious metals regain their allure during currency devaluation. Gold in particular has been a beneficiary of currency wars, as investors flock to it as a hedge against currency devaluation and inflation. Alasdair Macleod stands out as a prominent figure in the financial sector, holding the position of head of research at goldmoney.com and founder of Macleod Economics. Alasdair Macleod expresses concerns about the dollar's credibility, linking it more to its decline than gold's rise, highlighting the surge in outstanding treasury debt as a challenge. Gold has now risen for the 7th consecutive day, marked by higher highs, higher lows, and higher closes, with one notable exception over the last 2 trading days. In the initial 5 trading days of the rally, gold gains were driven by market participants, with neither dollar strength nor weakness. However, in the last 2 days, the increase in gold prices is mainly attributed to dollar weakness. In the discussion, the focal points driving the gold market were highlighted, while Alasdair emphasizes central bank acquisitions and the increasing demand from China and India. He speculates that despite India's strong economic growth, wealthy individuals opt to store their gold in Switzerland and Singapore. Contrary to popular belief that the rally is driven by safe haven demand and central bank rate cuts, central banks' strategic gold accumulation is the core reason. Analysts at ANZ Bank recently said they expect central bank gold buying to remain hot for at least the next 6 years. According to these analysts, depleted trust in the U.S. fixed income assets and the rise of non-reserve currencies are other themes that could support central bank gold buying. On the other hand, Alasdair asserts the economy is in recession, attributing seemingly positive GDP numbers to monetary and credit printing. Predicting a significant downturn, he suggests the borrowing requirement might exceed $3 trillion. Now, we present the clips of Alasdair Macleod's insights from his interview with Liberty and Finance. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
And of course, it's creating ultra high net worth individuals. Now, do they import their gold into India? No, they manage to get resources outside India, outside any exchange controls. And I should think they're probably stashing their gold in places like Switzerland and maybe Singapore. The demand from Asia is only just really starting. And also driving the price is the weakness of the dollar. We're suddenly beginning to realize that the dollar has got a debt problem. We've seen, goodness knows how many people remarking that in the last 100 days, outstanding treasury debt has increased by a complete $1 trillion. And people are beginning to realize that in this current financial year, you're probably looking at $3 trillion of new stock, plus about, I think it's 7.6 trillion of refinancing. Who's going to buy it? This is a problem. And of course, we've been talking about this for some time, but you can see how it's a situation which leads to loss of credibility in a fiat currency. It's actually as simple as that. It's not so much gold rising, it's the dollar going down. Now, most people would think, well, the dollar is actually pretty steady. The trade weighted is 103.4 or 6 or whatever it is. But we're not talking about the dollar against other fiat currencies. I mean, it is the king of fiat currencies. We're talking about the complete fiat currency cohort meeting a problem. Now, that $3 trillion of borrowing in this current fiscal year, which takes us up to September, assumes that the US economy isn't going to slip into recession. Well, I tell you, it's already in recession. The only reason that the GDP numbers look good is because of the money printing or the credit printing by the Fed. Well, yeah, by the Fed, if you like, and the U.S. Treasury. The U.S. Treasury is spending this money into GDP. It's not productive. So the idea that the economy is looking good is not at all true. And so I would be very, very surprised if the U.S. economy doesn't actually go into a deep slump. So what does that do to the borrowing requirement? We're looking not at 3 trillion, but we're probably looking at somewhere 4.5 trillion. And then you look at interest rates. Are interest rates going to go down when all this funding has got to happen? No. And not only that, but banks are still running scared of lending to small and medium-sized businesses. Consequently, if there's a scarcity of credit, what happens? The price of it goes up. I mean, it's a no-brainer. It really is as simple as that. And then today we had the Bank of International Settlements came out with a warning that it looks like inflation is going to be around for a while. They made the point about enormous amount of debt that needs to be funded and all the rest of it. And consequently, they didn't see that interest rates were going to decline in the near future at all. So you can see there's a sort of awakening to this reality.
During the interview, Alasdair Macleod discussed the correlation between gold and silver prices, noting that when gold rises, silver tends to follow at almost double the pace. He states that gold and silver experiences an upward trend, presenting an opportunity for investors to generate wealth. Silver prices are near steady and scored a 2-month high overnight. Precious metals traders this week are focusing on the prospects of easier monetary policies this year from the world's major central banks. That would extrapolate into better consumer and commercial demand for metals, and also theoretically pressure the US dollar index and lower US Treasury yields. In his analysis, Alasdair pointed out the minimal movement in mining stocks like the HUI index. He's concerned about the sector being overshadowed by the current focus on tech stocks. Since 2022, when the U.S. Federal Reserve began hiking rates to curb soaring inflation, gold miners have struggled relative to the price of gold amid rising costs towards financing, labor, and materials. The weakness seen during the past few months has left the sector increasingly undervalued relative to the gold prices, hitting fresh record closing highs. Let's get back to the interview.
I mean, silver basically, once gold starts running, you'll find that silver runs approximately twice as fast. The problem with silver is that when gold is not running, I mean, gold can be moving sideways, then, the price, can decline. And we've seen this. I mean, we saw silver running back down to, 22, 21 something, having been up to 26 when gold first hit that high at I think 2070 in August 2020. It's a difficult one. I think the problem also with silver is that no central bank regards silver as a monetary metal for the purposes of its reserves. It is an industrial metal. Now, I would argue that as an industrial metal, it's actually got enormous qualities. And on that basis, I would think that the price here is too low. But the relationship in the paper markets is quite simple. When gold starts running higher, silver runs almost twice as fast on average. So now that we see that gold is breaking out into the upside, we're talking about the price of it in dollars, then on that basis, I think we could well see that silver might catch up and run back up to that $26 level. So hopefully you will feel a little bit more wealthy as a result of this. We've had gold sort of knocking on the 2000 level, and now, that's certainly support, and arguably even 2100 is now support. And what have gold mines done? Very, very little. I mean, the HUI index, I see it here as 220, having been down to something like 198. I mean, okay, it's up 4.5% today, but this is in terms of stock market valuations. Of course, all the fashion is with the tech stocks. And the result is that mining stocks are just completely ignored. Not only that, but they have been out of favor for so long that mainstream investment managers actually haven't got a clue how to value them. So they really are lagging behind the curve. And, my personal view is that it'd be worthwhile looking at, the sort of, if you like, the majors. I mean, just go for safety. You don't need to be terribly clever. Don't start going for 10 baggers and 20 baggers, which, if you're going to play that game, you have got to know a lot about geology. You've also got to know the management. You have got to have been moving in those circles for some time. You've got to be someone like Rick Rule to do that successfully. Otherwise, there is a big risk you come a cropper. So just go for the majors. And I think I would say that they look terribly undervalued to me.
If the history of gold and silver has proven anything, it is that these precious metals provide a form of insurance in times of crisis. Purchasing and storing your assets offshore will prove worthwhile in case of market failures and governments taking control of assets. How do you envision the future of gold and silver in the face of ongoing economic uncertainties and central bank strategies? Share your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.